The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We have the Dow Industrials up 121. You get the Nasdaq up 51. S&Ps are up 12. Gold's down 13.40, trading at 12.47. We have silver down 5 cents at $16.17 an ounce. Light sweet crude off 72 cents, $41.45 a barrel. We got the API numbers coming out at 10:30. Bonds, the 10-year note down 3 ticks. 30-year bond up 1. Both the notes and the bonds failed. The February 1st swing point, folks, that's where the downdraft was, meaning as the market February 1st came down hard in the notes and the bonds. Good old King Dollar. King Dollar's up 750 ticks with light volume. At 94.70, King Dollar still looks to me like you're going to go downtown. And another day, another volatility. The volatility yesterday was just dynamite, man.
That was quite a move. I know.
It was just unbelievable. And as we do each and every day, we have our man, Mr. Kevin Hinks. And don't forget, folks, TD Ameritrade, Thinkorswim, Kevin, Scott, Cindy have an amazing show, 12 to 1 Eastern Standard Time. So no matter where you are right now, if you're in the West Coast listening to us in your car, remember that you can go right on your cell phone, TFNN.com, hit Tiger TV, get the show. You trade options, folks. It's an amazing show. And it's free. Give me a break. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How's everything going there, guys?
Morning, Kevin.
Hey, listen, man, it has to go good when you get volatility like we got in these marketplaces, man.
Yeah, exactly. You know, what a perfect title for today's show, right? Downside protection. How to look at downside protection for your portfolio. So, in other words, buy umbrellas when the sun is shining, Tom. That's what we're going to talk about today.
Boy, isn't that a trip?
It's not what you make, it's what you keep, right?
Yeah.
Very apropos topic, don't you think?
Yeah. No, there's no doubt. You know, that's a good saying. Buy umbrellas when it's sunny out.
Yeah.
Yeah. Particularly if you're in New York City, right? All right, Chicago.
Right.
Yeah, no.
That's right.
It's too late to buy an umbrella once it's pouring.
No doubt, man.
Yeah.
That's right. Try to catch a cab in this town.
Exactly.
It's raining outside.
Exactly.
Good.
Pretty amazing. You know, that move.
Weather in Chicago, just wait a few minutes. It'll change.
Yeah, I know, man. I know.
But you know, Tom, don't you guys think exactly what we were talking about on yesterday's little talk we had? JP Morgan Chase beats lower numbers.
Yeah.
Right?
Yeah.
Everyone's beating lower expectations here.
Yeah. And that's so true. It's pretty amazing too, man, because you know they had the expectation lower. So J.P. Morgan came out with the numbers, folks, and bottom line is that top line revenue they beat it slightly. Okay, so it's bidding up $1.73 or it's 61.01, and you know it was funny. I heard an analyst out there yesterday, and it was pretty cool what he said. They were asking about, you know, J.P. Morgan coming out. And he says, you know, man, he says, the way these banks go, he says, the market, he says, sometimes looks at earnings and looks at banks and saying, okay, what are you doing right now? And he says, other times they look and say, okay, what are you going to do in the next 3 months? And he says, we don't know what's going to happen until it comes out. And he says, I have a feeling they're going to look at it and say, okay, a lot of these fines, you know, for basically their behavior, you know, 2007, 8, 9, you know, basically coming to an end, and maybe they're going to look at it that way. And it's intriguing. Right. Do you know what I mean? It's like, okay, is the bottom of that cycle, right, and it's going forward again? And that's
what everyone wants to know, right?
That's what everyone wants to know. Yeah. There's no doubt, man.
Traders hate, you know, when things aren't sure. They hate doubt. When you put a number on something, all traders feel better.
Yeah.
About a good company when all doubts removed, like Goldman a couple of days ago, right? When they put that number on it, $5 billion, the stock rallied. Because they knew, even though that was a hefty fine, they love when you define the number.
Sure. And look, it's up another $4 now.
Yeah.
You know, because what is pretty wild too is that when you define the number, you know, the number, folks, was like $5 billion with Goldman. Well, guess what? Goldman takes in $7.9 billion every 90 days.
Right, exactly. You're
And they
talking
knew
about
that number was coming somewhere in the billions, so...
Right, and part of that is a credit, that it's not actually money going out the door, so pretty amazing.
teardrops and tidal waves, right, Tom?
Yeah, seriously, man.
That's what Goldman's dealing with. I think they paid that within 5 minutes of getting that fine.
Yeah,
Oh,
right, exactly.
and said thank you, God.
Yeah, everyone was high-fiving.
Yeah, have a
Right?
nice day.
Totally.
Totally.
Yeah.
You kidding, man?
Yeah.
No doubt.
So
So
yeah, that's what we're talking about today. Downside protection for your portfolio.
that's a great time to talk about it, man. Right when we're going after those highs, man.
And we're going to get oil at 10:30. That'll put some more volatility. We'll see where the market is.
EPIA. Now,
Yeah.
the API number came out last night.
Yep.
They were looking for up a million barrels. It was up 6.2 million barrels.
Okay.
Ooh, that's
So
interesting.
now we'll
Okay.
have the second leg of that today here at 10:30 Eastern time. So we should get a good picture.
Yeah, there's a lot happening before you guys even go live in an hour.
Right. It'll already be a long day.
Right? Exactly.
Yeah.
I saw JJ this morning on CNBC as I was leaving the house. He was doing good out there.
Yep. He's a busy guy.
No doubt, man. No doubt.
Yep.
So the aspect of
There we go.
Noon, folks. That's the bottom line. I'm going to jump on at noon. You got to love it. Kevin Hinks, have a great one, man. Have a safe one. Look forward to show at noon.
Great talking to you guys. Have
Thanks,
a good
man.
Thanks, Kevin.
Okay. Stay right there, folks. Tommy and I are coming right back. And, of course, we're going to be, let's see.
Yeah, we're close.
15 minutes.
One more segment.
Like it. Dow up 128, NASDAQ up 55, S&P's up 13. We're going to be right back.
TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow up on 129, Nasdaq up 57, S&Ps are up 13, and
let's take a look at this oil.
It's all been about oil for so long.
I mean, listen, I wake up on Wednesday mornings more excited to do this show than probably any other day because...
Isn't that funny? I know. It makes sense,
Thursday's fun with natural gas because that's a move or two in commodities, but nothing moves the market right now like oil.
Right.
So
and we haven't... What I think will happen with natural gas, if it finally catches another bid, you know what I mean? Every bid fails.
It's just been
if it
such
catches
a mess,
bid and gets in a bull, then we'll be excited. Because then it's like, okay,
it's still not going to affect the market as much as,
No, it's not.
If oil pops, the market goes bananas,
Oh, look at this, man.
Yeah, so we got action leading up to...
That was quick.
Just pulling it up. I mean, what are we looking at? So this is yesterday, and this is our today session, just to get it in full context.
So
that was after the close yesterday.
You look at a 5-minute chart.
Yes. So this is yesterday's close, and then this is coming into the morning. And then, I mean, it doesn't look like much when you expand it to yesterday, but yeah, we're up 30 cents, and we were down 30 cents.
In the last 25 minutes, right?
Yeah, exactly.
So we're coming into the number, with some strength.
Yeah.
And what we had yesterday, folks, is that had the price spread and it had an expanded volume going against the swing point that we're at right now.
Okay.
So your probability is pretty good that you're going to bust that swing point. We'll see whether they can get up and over it, but it wants to get into it.
So would you be, and I know you don't have anything on yet this morning, but would you be bearish or bullish right now coming into these?
I'd be bullish.
Bullish, yeah.
I'd be bullish. And, and one of the main reasons, I guess, what ends up happening is that when it's made a move like this, it's almost like, I have a hard time buy into a move once it's already been made.
Yeah, it's just the risk reward we talk about.
It is.
For sure.
And it doesn't. I'm bullish in the aspect that I think it's going to break, and if it does break, there's some real juice behind this thing. I mean, because this has been a fast move. Now, what will be really intriguing is that you have King Dollar up like 700 ticks.
Okay.
So King Dollar is not going with the oil market, meaning a weaker dollar, would give you stronger oil.
Yeah.
So if it in fact does go against King Dollar's up, that's going to be even more, important looking at it,
So just taking a look of possible trades, right?
Yeah.
Because that's the thing, you want to understand, if you think one thing, what's a good trade to maybe benefit off that?
Right.
So if you're bullish, right?
Yeah.
You're coming into the numbers. What time is it exactly? We got 10 minutes until the numbers.
Okay.
So this is a nice spread here. So 39.50 to 44.50.
Yeah.
So again, we're dealing with a $5 spread. So you have, think of it, $500 over the entire span of that spread.
Right.
So whatever you're risking versus reward is going to combine to equal kind of that 500.
Yes.
And we're somewhat near the middle of this spread.
Yeah.
So the middle of this spread would be 250 away from each side. That would be about 42.
Yeah.
Okay. So we're right under it, which is actually right where I know you like to be. That's where I like to be because so look at what happens. We're risking 226. Let's call it, for a max profit of 275.
Right.
And the best part is we're barely paying any premium. You're paying 3 pennies of premium.
That's amazing.
Off of, so that's a great one where you really want to be aware. Where guess what? If oil pops $2 one way or the other, you have the risk reward in your direction, in your favor, and you're not paying. I consider that no premium for how much we know oil pops after the numbers come out. That's a small premium, and it's so small because your risk reward is almost a 1-to-1. Yes. When it's a 1-to-1, you're going to be paying no premium. Right. And that's a nice. I like those setups because you're kind of making just a straight futures play. You're getting in. You aren't paying much premium, but guess what? You do have a risk reward in your favor. So that's nice when you can, because over the long haul.
And it's defined risk.
I've talked to you about that before. Over the long haul, it's really important where you can't be risking, even if it's like 1.1 to make one, that 0.1 is going to add up a lot at the end of the year. Yes. It is. Yes. So there you go. We'll see what happens.
At the end of your trading career would add up
exactly. And that's where you have to keep in mind, that you're going to run that scenario, that trade, over and over and over and over and over.
Yeah.
You know, and so you want to say, if I make this trade 1,000 times,
that's right,
do I come out positive? And that's where you want to have some conviction that you're making the right decision. And you can see that's risk reward setups like that. I'm comfortable with that, making them 1,000 times.
I know. I know.
And that's where people should think like that. I think that in a lot of things.
You have to think like that.
Yeah, because it allows you to understand whether you're making the best decision for the law of averages, you know, as opposed to saying, it's okay if I pay 15 cents a premium because oil's so big, it's going to pop, and today I have a feeling. That doesn't work in the long run because you pay that premium, you pay it every day. You want to think like that.
It's huge.
Yeah, exactly.
It's huge. So if we let's I'm going to bring this up just on a daily basis for a second, so you can see.
Check out some volume.
Yeah, we've been looking at, right? So the swing point that we're dealing with here, the bottom of the swing, excuse me, folks, is $41.02. The top's $42.49. Last time we were up, they had 670,000 contracts, right? So we pushed into it yesterday with 797,000. When you push into a swing point with volume, it wants to test at least the top of it. And the probability is when you push in like that, guess what? You can go higher. You can break it. You know,
so the high of that yesterday, 42.25.
Yeah.
And what was the high?
42.49.
Okay, cool.
Yeah, isn't that true?
Yeah.
Yeah. You know, so, you know, today, hey. Let's see. What do we got? 6 minutes, man.
We got like 2 minutes. 2 minutes to the commercial break. 3 quick commercials, and then the numbers pop at 10:30.
And then here, let's go over to the gold market because it's so cool what happened with gold out here this morning. Yeah, gold pulled back. It's rejected lower price. It pulled. We had buyers this morning.
That's a big bar.
Oh, it was really cool, man.
What time is it?
At 8:30.
Okay.
And so that's not the open. 8:20 is the open.
Were there numbers? There was
CPI number, I think.
Yeah, there was. Yeah.
And what happened is it's really cool. The buyer came in the gold market and the silver market.
That would make sense. Yeah.
Okay.
Yep.
So what you had is this. So watch this, folks. You go up on 8,400 contracts. We came back to that level with 4,600 contracts.
Yeah, nothing's going to match that 8,400.
No, because you saw you coming into my office. That's how I was scrambling.
Okay, nice. As opposed to you're always scrambling. But that's
I know, but that's what I was scrambling on.
Okay, yeah, totally.
You know what I mean? So it's that's a classic. You back down with lighter volume and say, okay, you know. And now what's intriguing, and this is where it's going to get wild, is that the dollar index, it's still up. It's 745 ticks up. You know. And we'll see whether that's going to make a difference. On the gold stocks, they're still not, down. I mean, you got them.
And just so as we're coming in, I can't help it. Seeing already, and this is where we should get this up. And right? And so it looks
Bloomberg users expect U.S. crude stockpile gain of 5.32 billion. Million. Okay, 5.32.
So we got the expectation, right?
Yeah. That's good.
Yep. So the EIA weekly stockpile report will probably say U.S. crude inventories rise 5.3 million barrels. We'll see.
Okay.
Tick-tock, go the clock. 180 seconds. We'll be back with all the news oil traders need to know. If only you could have a little time machine. 5 minutes. That's all we need.
I know. Oh my God!
Right?
5 minutes. How about 30 seconds?
I know. Yeah,
right?
Seriously.
That's.
It's like if you want to get down to it, it's literally like 5 seconds.
Seriously.
Yeah. And that's using your fingers, let alone if you just had a computer doing the work.
Big time. Hundredths of a second.
Exactly.
They're trading in microseconds.
Yeah, no, it makes sense, right? You can't even almost understand it in our own heads. They're so quick. Yeah.
Stay right there, folks. Tommy and I come right back, and those oil numbers are coming right up.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So oil inventory is up 6.63 million barrels. Now, what's intriguing about that's almost the same number that was out here last night.
And let's see what's going on, right?
Yeah.
So it seems like that's 1 million more barrels than they estimated.
Yes.
So you have more supply, should cause everything else stable price to pull back a little bit.
Yeah.
But like we know, there's a lot that gets included in these numbers in terms of demand.
Look at it go.
Right?
Sorry, folks. Okay, we're looking at the
No,
chart.
they're not there yet.
No, but they're in the car.
Okay, yeah, no.
And look at it go. You can't see that?
Right?
Sorry, folks. No, we just went from 41.50 to 41.80 to 41.90.
Yeah, and really we were about 41.70. And it looks like it shot down to 41.50, and now we're right at about 42.
And 42.49 is that swing point.
Yep.
You know?
So 6 million extra barrels. And they expected 5, but bottom line, 6 million barrels, no matter what.
Now that trade that you were looking at there, that turns into a decent trade.
Yeah. So right away we're already up. We would have been up $20 per contract with only about $220 at risk. And you can see it's still so similar. And I just like those where the premium is tiny, and you still have risk reward in your favor.
Right.
That's a good trade.
Right.
It is.
Right. So let's take a look and see what that has done to the marketplace here. So thus far, you get the Dow up 123, NASDAQ up 56, S&P's up 12. Let's go take a look.
One sec.
Take a look at ExxonMobil, see where that baby is. So you get Exxon up 4 cents, no big deal there. Chevron's the one that's coming up into the high. Now see, Chevron's going to tell us quite a bit, man. This November 3rd high, and Chevron, that's a high volume swing high that's been trying to get into, $98.64. And we're hanging. We're going to be there, man.
Yeah.
You know?
And like we always know, oil takes a good 15 minutes.
It does, man.
And look at it, right back.
It does.
Right back. We're back to 41.70, exactly where the bar began at.
Yep.
Now we're going down. We're under 41.7, 41.69, 41.68. Here we go. Why don't we jump to our caller? Let's see.
Absolutely. We got Mike in Dallas. Hey, Mike, what's going on?
Hey, how are y'all this morning? Hey, Tommy, you had mentioned something a few minutes ago when you were looking at an oil trade.
Yes. These spreads we're looking at with the premium, for sure.
Right, and you were talking about premium, and you said, well, the premium is just within 3 cents or something like that.
Yes, that's what it was, yes.
Right, so you were comparing the price of crude to the price of the spread.
Yes,
correct?
for the bid offer of where that spread is trading at, exactly.
Okay, now, what do you have a general rule where you would not trade a particular spread on a market if the premium was too high? In other words, what is too high?
So the general rule that I keep in mind, as oil is just tanking in the process too, but is that you want to what are you expecting versus what is the market pricing in, right? So if I'm expecting a huge move, then I'd be willing to pay that premium because I'm expecting more than the market is making you pay for that premium, right? And that's just a general market bias decision that you have to make as to. So a good way to compare this, right, is so we were looking at the 39.50 to 44.50 spread, and that put us close to the middle of the spread, which was the reason why there was very little premium. Now, the other option that I could have pulled up, which I did not, though, because there would have been too much premium for what I was liking there, was the spread above that began at $42 and went to $47.
Okay.
So right now, and I glanced at it before we pulled it up, and I was like, that's too much, because right when it was trading, let's say oil was at about 41.70, and I saw it, and this one was trading, now it has to be above 42 no matter what, because that's the bottom of the floor, and it was trading at about 42.25. So right away, you were paying 55 cents of premium.
Huge.
So the market needed to pop 55 cents just to break even. And in my head, I said, I'm not comfortable because I don't know if oil has that type of move to pay that type of premium.
Right.
But, Mike, if you expected, hey, oil has been getting kicked, and I bet one of these days it's going to pop $1, $2 on this news, then maybe you would be willing to pay that 55 cents of premium before you hit your break-even price on that spread. Because guess what? Realistically, that spread from 42 to 47, you would have been getting it at about 42.25. You would have been paying $25 of risk for a potential $475 in profit if oil could somehow manage to get to $47 by the end of the day. So that's kind of the methodology that I go through when saying, is that premium worth it? Do you think that the market has that type of a move where it's worth it to pay that type of premium?
I'm with you.
Yeah.
Okay. So you try to, if it's zero premium, you're at 50% of the spread.
Right, and if it's zero premium, it's going to be trading basically right at the middle of that spread. Sometimes what you'll see is that, let's say, you have $1.50 to the downside and you have $3.50 to the upside. You could still have an even market, and we've seen this before, but all that's really saying is that the market is expecting $1.50 possible to the downside, and guess what? There's not much more than $1.50 to the upside. So your risk is very even though the technical max profit you have in that is higher. Very seldom is oil going to pop $3.50, maybe with an hour left in the trading day or something like that. But that's a higher risk trade too, is what's going. It's a low probability trade because you're risking a tiny amount for a max profit, so it's lower probability, and so that's a higher risk versus when you're not paying premium. The market can settle right where it's at, and you don't lose any money. And that's the nice part about that too.
It's huge.
Huge. Okay, very good. Well, I appreciate the explanation, and your show is great. Thank you both.
Well, we appreciate you growling a problem with
Thanks
us
for
out
the
here,
call,
man.
Mike.
Bye-bye.
Take care.
And if we look at the market, so we got oil right now is at 41, 42. And really, that hasn't moved much compared to, it might have rejected this low from 10 o'clock this morning already.
Talk about what a little area, right? This is where we talk about ranges. I mean, maybe we have a nice little range of 50 cents almost that could trade throughout the day.
How cool is that, man?
Yeah.
And, the Dow right now is up 104, Nasdaq's up 47, S&Ps are up 9.5. Let's go to John in Philly. Hey, John, what's going on?
Hey, good morning, Tom and Tommy. How are you both?
Morning, John.
Doing good, man.
Doing good.
What's happening?
How's Philly?
Hey, first, thanks very much. The two of you going through these Nadex exercises, I think it's really terrific. I've found those Nadex tools are really helpful. but it does take a lot of practice to kind of get the vocabulary and the systems in your head. So that repetition, I think, is terrific.
Awesome. Yeah, and there's no doubt, folks. You can test drive. You can bring the exchange up. Use paper money, and as John just said, go through them.
That's how we both did it for at least a good month or two,
exactly.
And then even with the cash, you get in there. You start small with one contract,
and then it turns just into a future. It's
and like anything else, once you understand it, you're comfortable to really put your money behind your trades.
Right.
Yes, so thanks again on that. I'd like to change subjects on you, Tom, and ask you if you would pull up CME Group common stock, ticker symbol CME.
Yeah.
Tom, I always track the performance of 10 names that I've just posted in the Tiger's Den. They're just 10 companies that are integral to the financial system. And if I see any one of those 10 names doing something weird, I always stand up and take notice for clues of trouble or something.
Okay,
CME has sold off. Can you tell me what you see in this stock?
Absolutely. Just stay with us a second. We'll be coming right back. Dow right now, folks, is up 97, NASDAQ 46, S&P's up 9. John, Tommy, myself, we're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we're talking with our man John from Philly. We're talking about the CME. When you take a look at this, John, what you've had is this: is that you've come up to the downdraft of 2008. And, you know, we've done that with dramatically lighter volume. When you see this, it's pretty intense, actually. So we're at a price point of $90. And 121 million is what we did in March of 08. We did 136 million in February of 08. And the first time we come up there, we did 41 million. Next time, 29 million. Next time, 36 million. And so that's going against 08, and you can make the argument, hey, that was a different time, 08, okay, but that's still a supply line. There's people trapped at the highs up there. And then when you take a look at it as to, you know, this is set up kind of just like the Dow is, the NASDAQ is, and the S&Ps are. And what it is that you have the high volume swing low at $81. You got a high volume swing low at $81 when it tested it in January. And that was testing the August one, so that's saying that that's where it wants to go.
Say, Tommy, is it fair? Thank you so much for pulling up that monthly. That's really illustrative. Is it, you know, I just noticed you saw last week that you're looking at now in the Tiger's Den that we had a break. And, of course, that break, while it was a good trading break, doesn't say anything only because we're in the middle now of a one-year trading range. Is it fair to say, Tom, that if we break that 81, 82 low with volume, that would be highly negative?
Yeah, you know, that's where the market is held for, you know, almost, 2 years, right? Yeah, you know. And so the next stop would be down somewhere at that $70, level, you know. And I expect, you know, bottom line is that that's where we want to go. You know, I think, you know, this run higher right now has been pretty cool because it's flipping everyone right out, you know. And no one, not that no one believes it, but, you know, I think what it's done is got the fear out of the market, you know, because that was down so fast, and it was so you had an August happen, then you had a January happen, and what happens in the marketplace, which is so just amazing, is like, how does the market do it? You know, folks had a chance to get out, and that was a very big hit. After 6 years, that wasn't much of a downdraft, but it really was because people weren't used to the market going down at all. And now I think they're complacent again. And, you know, it takes everyone to be complacent. You've been doing this long enough to get a market that's going south.
Yes.
You know, that's, you know, so. And, you know, if I switch gears with you just for a second and we go into the commodity market, which is so weird, is that, like, the run on gold, they got John Paulson out. John Paulson was the biggest owner of the GLD for 8 years. And,
you know, fight that storm for so long.
Right, and he ended up with a quarter of his position, okay, but that's it. And a quarter of his position, just so you understand, folks, how big this was, you know, the last sell was in December, and let's see, largest positions.
Tommy, as you're looking through that, I just have to share a historical thought that might be new to some of your new-coming listeners on TFNN. Back after 2012, as gold was coming down, you occasionally and with some regularity would pull up the GLD, and you'd be saying, you know what, this decline is ongoing and it ain't done. And, oh, by the way, look at these big players still long the GLD, and I bet you we're not going to bottom until these guys are out. And what do you know? Paulson's out at the low, as you're just talking about.
And it's sad. I can't stand it. You know, being a trader, folks, you don't want that to happen. But for somehow it just happens. You know what I mean? And you see it. And, you know, you can see that the last sell, okay, 3.4 million shares in December, okay. 5.7 million left, and I believe at one point, I'll have to get the exact number, but it was a monster number, man. I mean,
just going over. Tom, you know, I remember watching this very screen that you're showing on Tiger TV. Once upon a time, his holdings in GLD was 10% of the float.
That's what I thought.
And he's at like 2% right now.
Right.
For people.
That's what I thought. Yeah. Right. I mean,
thanks so much on that CME. I appreciate it.
Okay, man. Have a great one. Have a safe one. And that's what happens when you get. That's what happens in markets, right?
That's what happens when you have huge losses, no matter what.
Yeah.
Sometimes you just gotta cut the tie and start from scratch and you know, rip off that Band-Aid and
well,
get it done.
And you know where it's going to be, what we're going to see here? And this next one's going to be VRX. So the VRX, folks, okay, because what has happened here, this is really dangerous.
Yeah, that one's even scary in my mind, because at least when you have gold, it's not going to zero.
No,
whereas, VRX, that could go to zero in a second.
And when you take a look at this, what has happened is that, you know, Pershing Square, he's doubled down.
He has.
Again.
He has conviction in his movement, I know.
You know, and, you know, I saw him do this in Tiger.
Oh, listen,
but he lost. In Tiger, he lost.
But, you know, and we don't know how this is going to shake out.
No,
and I'm sure he's done his due diligence, or at least he thinks he has, right?
Oh, he's a smart guy.
Right, exactly.
The
so
guy,
there's something driving that.
Oh, for sure.
And in terms of knowing the ins and outs of the company, he probably knows about as much as you can know without being probably the guy literally doing the books.
And what also he has, and this is what is huge, he runs a huge portfolio, and he had other huge winners that he actually did sell so he could keep this. Right. You know, so there's it's not like, you know, having one stock and he just lost in the whole stock. Yeah. I mean, the fund's down big.
He's not like working for a yearly salary and then taking his salary and investing it in his losses, which nobody should be doing. Exactly. It's like, you know, at least you're playing with the house's money to some degree, but that money's going to run out at some point.
He's down 23% right now, so he can't take he can't take a dime. I mean, the whole fund. He can't take it. He can't even make money until that goes back to even and then
himself.
And then goes up. Let's go back to that oil market and see where we stand. Look at this! Oh my God, that's sick. So, folks, we just went from 41.20 to 42.
Back above 42.
This is going to flip them right around. Yep. And look at that. That was a test of that low. How cool was that? Unbelievable.
Yeah.
You got to love it, man.
Yeah, so just going back, right, we were talking about the spreads, okay? Yeah. So, again, now here's our $42. We're right above 42.
Right.
So right now, you're only paying 33 cents. But guess what? You're paying that, and the news already came out, though. That's what to consider. So when Mike's saying, would you pay the premium?
Right.
I wouldn't pay 50 cents before the news.
Right.
I might have paid 30 cents before the news. Right? But I don't think I'd pay 30 cents right now after we just went 70 cents up and the news is already out and there's not going to be. And then let's just take a look at where the other one is trading. Yeah, so that would have been just up 30 cents there.
Yep.
And this is literally square right at the center. So 42 is the center of this spread.
Yes.
So this is where exactly 42.03 is the market, and look at it. It's square right around it.
How cool is that?
Yeah, and that's how it should be.
Yeah. And that's, you know, if you haven't test drove this Nadex platform, folks, go over and do it, because once you really start understanding how these spreads move, you know, as Tommy brings you through them, if you trade futures, man, I love trading the oil contract, the gold contract, and the NDX 100 on these. Particularly, gold is like the ultimate.
Well, you love it. I mean, oil isn't? I mean, look at these.
Oil is too. The difference with gold, I'm always worried that gold could down $50.
Okay, for your defined risk.
Yeah, exactly. Yeah. Exactly. You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Give us a call, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. you get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And oil is going to go after that swing point. We're at 42.17 right now. When we talk about oil, Mr. John Logan kicks us off, of course, every trading day.
He does.
And, if you have been listening to John, man, that scanner was picking up oil, bottom line, Monday and Tuesday.
It does what? Indexes, ETFs, commodities?
Yes.
It is quite a suite of software, for sure. So John is doing an event a week from tonight. Wednesday night, the 20th. Okay. He'll be doing an hour-long segment, 5:30 till 6:30, and opportunities in the current market. So he's going to be walking through and strategies to profit off that. So, it's such a sophisticated piece of software you use. We have videos everywhere to make sure people understand it, but seeing him walk through exactly what it's telling you, know, and he's the guy that created it. Nobody understands it as well as he does, and it is an awesome piece of software.
And it's wild. It's sophisticated, as you said.
Yes.
But, folks, it's right in front of you. It cuts through so much time.
No,
oh, my God, it blows your mind.
Once you understand
what you're looking at,
it is so simple.
It's huge.
It is.
So you can sign up for the workshop coming over to our website at TFNN. You test drive. It's for subscribers. You test drive the scanner.
Yep.
It's 30-day money-back guarantee.
Yep.
Right?
Yeah.
So you have nothing to lose,
you
folks,
get in there,
and everything to gain.
You get it for 30 days. And you get his workshop, and of course we have so many videos out there walking you through exactly what to look at, and he's going to be walking through right now what it's saying right now about whether it's the different sectors in the market. We were talking to him last week about what he's going to be talking about, and then saying, okay, this is what it's saying. Now how do you trade off that? As in, how far can it go, right? Where are we putting our stop? Where are we getting in? There's so many nuances to trading, of course, off of any system.
That's right.
So walking you through that.
And as you are over there, of course, we have tax day coming up.
I know. So it's perfect how these all tie together, right?
Yeah, totally.
So tax day is Monday. You got the extra weekend
Thank God.
For the holiday. And so we got a Tiger Dollar sale running. You get 20% to 40% on whatever you spend. You can spend $500, and normally you just get a 10% bonus to $550. Instead, you get 20%. You go to $600. You get an extra $100. You spend $1,000, you get 30% bonus. You get $1,300 Tiger Dollars to spend. And if you spend $1,500, you get a 40% bonus, an extra $600 Tiger Dollars.
Big money.
Which is real money. And then throwing it right to our third thing that we have going, Andy Hecht, right? Did a great show last night. Yeah. I was watching him. 12 essential lessons for trading commodities. Literally everything you need to know about trading commodities. I've already seen each lesson. He sent it over. He's already working on it. He's got a good deal going on. And that is $595. Now, the great kicker of this, 12 lessons. Each one's going to be about 35 to 45 minutes.
Right.
He's going to break it down into 4 nights over 2 weeks in between. So really it's like 6 to 8 weeks. 3 lessons per night. You'll have those archives for a full year. So this is like an in-depth course. This is, a version of our Master Trader we've done. This is Andy's entire walkthrough of how he trades commodities, what he does. And at $5.95, the best part about this is that if you're thinking about attending this, I would go out and buy some Tiger Dollars, because you could spend $500, you receive $600, and guess what? You just got to attend Andy's course for $500, and you apply at $5.95, and you're there, and you got literally everything. If you're trading commodities, if you've listened to the show, you know he knows what he's talking about. It's not even close. I mean, and we've talked about where you can't just trade technically on commodities. You got to have the fundamental, and that's what he's looking at a lot. And let's just take, I mean, even as he goes through, we have all of the lessons that he's going to be going through here, and you just get a quick feel right away. Physical versus derivatives, overview of market structure, backwardation and contango, term structure, processing spreads, location spreads, right? Where are these things stored? That's the great thing about commodities.
It's huge, I know, man.
Intercommodity spreads, quality spreads, technical indicators, so it's great. So
and the demographics, the first one too is so, commodity markets and demographics. Because what is so cool is that as there's more people, if you know where there's more people, well, guess what, man?
Yeah. Who are you? You were talking to somebody, and I heard you saying that. Who were you saying that to? It was somebody.
I was.
What was it about? Oh, it was Everbank. There you go, Everbank. Give them a call for their 5-year market safe. It was Chris Gaffney.
That's right.
Talking about you got 5 years of commodity upside with your principal protected.
Totally.
There you go.
And that funding deadline, folks, is tomorrow. So if you want to check that out today,
they'll get it done.
Stay right there. Basil's coming up, folks. Thanks so much for being with us. Have a great one. Have a safe one.
Thanks man.
Pal. Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.